There will be, and I think it's not just India. I'm sure you've seen China's done the same. They've said that they can't get insurance on their own, so it's NITC, so Iran's national oil company, that is effectively providing the insurance for both India and China. But you know what is interesting about this? Remember last time under the Obama era, when there were sanctions, Iran ended up storing a lot of oil in their own tankers, about 30 million barrels. Now, today, India and China import a lot more crude compared to back then. And if Iran is effectively tying up its own tankers, supplying crude to India and China, it won't have any available or not many available to float. So they might have to cut back production earlier than we were expecting.
So you've talked there about the impact of the customer change and what that will mean for production. Can you give me some numbers? What do you expect to see from Iranian production over the next 3-4 months once we hit that November deadline?
So I think even before that, from August onwards, we've seen a significant decline in exports because the dollar sanctions kicked in. We are expecting exports to decline by 1.5 to 1.7 million barrels per day from average 2017 levels. So exports should go from about 2.7, 2.8 that we've seen earlier this year to about 1.2 million barrels per day. So similarly, production from about 3.7, 3.8 should go down to about 2.2 to 2.4 million barrels per day. That's what we are expecting by year end.
Amrita, so I want to go back and draw on that OPEC pledge back in July. The pledge to produce an extra 1 million extra barrels a day out of OPEC and non-OPEC members, well, Russia there namely. According to analysts, the extra production has been to the tune of about 400,000 barrels a day, a big shortfall versus that 1 million target. I mean, is that 1 million actually achievable?
Oh, well, I think that's the million-dollar question. I do think we've seen about 1 million in the form of exports. Now, whether they've drawn down storage or just run their refineries less, again, it's a big debate right now in the industry. I think in terms of pure production on our numbers, we have seen about 800,000 to 900,000 more if you include Russia, for instance. Remember, you do need to take out Venezuela from this equation because they're continuously declining. Between UAE, Saudi, Kuwait, Russia, we have seen about 800,000, and Iraq has increased a lot. So I think that million is just about there. But I think the critical thing is Venezuela continues to drop. Iran is finally falling. We had that big timing mismatch, if you remember. OPEC had increased production too soon. Now Iran is falling. So the market is really, really tightening up very quickly.
You mentioned there Iraq increasing production, and your latest research note seems to indicate that you expect that to continue for the next 18 months or so. But you do note there's a caveat that there's not a lot of real spare capacity because of political uncertainty. We've seen Iraqi protesters burning government buildings, party buildings, protesting over lack of clean running water, lack of electricity. At what point does political events there start to threaten production, do you think?
I mean, I think this is the thing in some ways. Iraq, Libya, Nigeria, all three, quote unquote, are stable right now. They're producing as much as they can. But all three of them very, very unstable. And yeah, I mean, it is only a matter of time. Only one of these protests really need to go bad, so as to speak, and production will come off. And I think this is the issue we have. OPEC have already increased production, and near-term spare capacity is very limited. I would say maybe about 300,000 barrels per day. Russia's already maxed out. Iraq has maxed out. So that means if you have any other outage, Iraq, like you mentioned, but even Libya, Tripoli, the situation is really bad right now. Of course, not near the oil centers, but still worth watching. Any other outage, we just don't have any spare capacity to be able to absorb it. Yes, Saudis might bring on the neutral zone, but that's still a few months away. So immediately, the market really will feel the shortfall.
Amrita, from everything you've told us, I get the sense that you're quite bullish oil. Yesterday, our colleague Hadley spoke to the Oman oil minister, and he said that he expects oil price to stay within a range of $70 to $80. Is that something that you agree with?
I think that's what OPEC would like, especially ahead of the midterms. They don't want to, get prices too high. It's become quite political. I mean, Oman is definitely one of the countries that is benefiting from lost Iranian production, and I can see why he is saying that its prices are going to be high, but not go up too much. But our view is a bit different. Given the physical tightness that we are seeing in the market, come November, at least in the next couple of months, we definitely see significant upside in prices. And like we just discussed, there isn't enough spare capacity. So I would say into the 90s.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.